Hi there, tax accountants. I hope all is well, and I pray that as you're viewing this video, that you are in the best of health and spirit. This video will cover Chapter 2, Comprehensive Problem, and the requirement is to complete the Redlands Federal Tax Return for 2023 on Form 1040, Schedule B, Qualified Dividends and Capital Gains Tax Worksheet, and Schedule 1. Form 8812 for the child tax credit does not need to be completed. The Redlands had health coverage for the entire year. They do not want to make a contribution to the presidential election campaign, make any other realistic assumptions about any missing data, and if an amount box does not require an entry or the amount is zero, enter zero. Enter any amounts as positive numbers, and if required, round amounts to the nearest dollar. So with this example, we see that there's a lot of information, and this is generally how it is in the profession. The client, they will either provide this information via a checklist, maybe through a conversation. But the key thing to keep in mind is that the fact pattern is different for each client. So we'll read through the information. Here it states, Terry and Maria Redland have been married for 8 years. Terry is an oil rig maintenance supervisor for Holly Ann Corporation, and Maria works as a cashier for Menards. Terry's birthday is February 21st, 1990, and for Maria's is December 30th, 1992. Terry and Maria have a 9-year-old son named Jamie Redland, born on March 22nd, 2014. It provides his social security number. Terry and Maria's earnings are reported each of their W-2 forms. So it says see separate tab. So here we see we have several tabs. Next, it says Terry took advantage of his employer provided dependent care assistant program on a small number of days when Jamie was sick and unable to go to school. The value of the dependent care assistance was $600. So this is essentially when an employer, they provide you with dependent care assistance. If you do not use the amount that was given to you, then a portion of it would be taxable. Here it states, once each week, Terry is required to work at the site of an oil drilling rig for a 24-hour period to provide an on-call maintenance of the rig. On those days, Holly Ann requires Terry to stay in an apartment building that sits on the oil rig site. Because different maintenance workers stay each night, the building has a cook and dining room that prepares meals for the crew. All crew members must take their meals in the dining room when staying the night. The value of the lodging provided to Terry is $6,000, and the value of meals provided to Terry is $750. Maria frequently takes advantage of the 10% employee discount on merchandise from Menards. The discount is available to all employees of Menards, and the company still makes a small profit on the items after the discount. Maria estimates her employee discounts in 2023 as $780. Terry and Maria have an investment income from a money market account in U.S. Treasury bonds and municipal bonds, as reporting on the following Form 1099 INT, as well as the brokerage statements. Terry has an ex-wife named Judy Redland. Their divorce decree is before the changes to the Tax Cuts and Jobs Act. So therefore, Terry is allowed to take a deduction for the alimony payments. And Judy Redland, on her tax return, she needs to record the payments as income. It also provides Judy's social security number. Then it says during 2023, Terry was in a hospital for a successful operation. In June of 2023, Maria's father passed away. There was a life insurance policy and she was paid death benefits of $25,000. She used $7,800 to cover funeral expenses. Maria bought a South Dakota lottery ticket on impulse during 2023. Her ticket was lucky and she won $1,000. The winning amount was paid in November of 2023. No income taxes withheld. Maria is pursuing a Master's of Business Administration from Lakes Region University. Menards operates an employee assistance plan that she takes full advantage of. She's also the beneficiary of the $1,000 Menards Adult Learner Scholarship. All of the scholarship is used to pay for tuition and books. Terry and Maria are eligible for the $2,000 child tax credit in 2023. So, as you go through this problem, it is very important that you read everything, as it relates to the instructions. Why? Because all of this information is important. It's either going to be considered taxable income, or maybe there would be a credit that is allowed or something of that nature, or based on the tax law, it is excluded from income. So it is very important to review all of the information to ensure that nothing that needs to be reported is missing. So we'll start off here with the 1040. We'll go through it line or paragraph by paragraph rather. So here we see Terry and Maria Redland. All right, so we have this information here, and then it lets us know some information about their dependent son. So we'll start off with some of the basic information. So we have Form 1040 for 2023. It doesn't tell us anything about them filing anything, any filing status other than married filing joint. So we have married filing joint. Per the instructions, neither of them want to contribute to the presidential election campaign. And as it states here, make any other realistic assumptions about any missing data. So if we, look at this line item, it asks, at any time during 2023, did you receive as a reward or payment for property of services or sell, exchange, or otherwise dispose of a digital asset? So this is basically asking about, cryptocurrency. So we're making the assumption, no, because nothing in the program says such. Can someone claim the taxpayer as a dependent, the spouse as a dependent, spouse is itemized on a separate return, or you are a dual citizen? None of these apply, so we click none. Here it's asking, was a taxpayer born before January 2nd, 1959? Are they blind? Were they born before January 2nd, 1959 and blind? So the information is here. It lets us know that Terry's birth date is February 21st, 1990. So for Terry, the answer is none. For the spouse, Maria was born December 30th, 1992. Does not mention anything about her being blind, so that is also none. Next, we see the information for the dependent, which is Jamie Redland, their 9-year-old son. His social security number is here, 721341134. It is their son. And I was asking to check the box if he qualifies for. So based on this information, and it lets us know down below, Terry and Maria are eligible for a $2,000 child tax credit. So are they eligible for the child tax credit? Yes. Credit for interdependence? No, right? Because Terry is not considered an other dependent. He is considered a qualifying child. So we went through the information for the first set of information provided. Now it shows Terry and Maria's earnings are reported on the W-2s. So we'll go to their W-2s. All right, so we'll try to make this a little bigger. All right, so here we have the information for Terry. He works for Hollyann Corporation, as the problem states. And then the wife, she works for Minards. So Maria, here's her W-2. So we know that for line 1A of the Form 1040, we report the total amount from Forms W-2, box 1. So if we look at the W-2 for Terry, the total line amount for line 1 for Terry is $45,230. If we scroll down to Maria's W-2, the total amount of wages reported on line 1 is $33,750. So when we add the two, the total wages as reported on Forms W-2 is $78,980. And since we already have the W-2s open, we might as well calculate the federal income taxes withheld that would be reported on Form 1040, line 25A. So if we look at box 2, for Terry, the total federal income taxes withheld are $5,088. And for Terry, or Maria rather, the federal income taxes withheld are $2,680. So the total federal taxes withheld are $7,768. And as mentioned, these amounts, the total federal taxes withheld, is reported on Form 1040, line 25A. All right, just a few key things that I would like to point out. So in the fact pattern, it spoke about Terry taking advantage of his employer-provided dependent care assistance program. The value of the dependent care assistance was $600. So if we look at box 10 of the W-2, there's dependent care benefits of $600, but it lets us know that the value of the dependent care assistance was $600. So essentially, he received assistance from his job of $600, and he paid for dependent's care of $600. So therefore, none of the dependent care benefits received are going to be taxable. So therefore, there's nothing that needs to be done with line 10. Or it will be reported rather, and then there will be a form 2441, which represents dependent care. That form would be prepared, and then because the family paid $600 for childcare, none of this reported on line 10 would be considered taxable. All right, so thus far we've taken care of the first set of information, and then we also just determined how the second set of information should be accounted for. Next, we see once a week, Terry's required to work at the site of the oil rig. So it's stating that the value of the lodging provided is $6,000. And that the value of the meals provided to Terry is $750. So this would be an example of employee fringe benefits. This is not considered taxable to Terry. So therefore, as we see, even if we look at the W-2, this information is not, reported because, again, it is not considered taxable. It is a portion of what's called a fringe benefit, and certain fringe benefits are not considered taxable to employees. So we took care of the third fact pattern. Here it says Maria frequently takes advantage of the 10% employee discount on merchandises from Menards. This is another example of an employee fringe benefit. So the discounts, the employee discounts made available to Maria, the portion here it says she estimates her discounts in 2023 to be $780. This is also not considered taxable. All right, so just keep that in mind. It says Terry and Maria have investment income from a money market account, U.S. Treasury bonds. So we have the 1099 INT and the 2022 combined Form 1099. All right, and since we have the W-2 open, there's one more thing that I want us to consider. Here for Maria's W-2, it shows us the educational assistant plan. So Maria is currently going to school and her company has an employee assistance plan. So therefore, Maria is not going to receive a Form 1098 from Lakes Region University, all right, with any payments being, made, reported in line 1. So therefore, Maria, she would input the information from the 1098. However, she does not receive an educational credit. Why? Because however much, the college costs, I'm assuming it's $5,250 for the semester, the full amount was covered by her employee, Maynard. So therefore, nothing came out of pocket. So there is no educational credit to claim. She also received a $1,000 scholarship. One rule as it relates to scholarships is that scholarships as it pertains to tuition and books, that is not considered taxable. However, scholarships for room and board, those are considered taxable. So just keep that in mind. So we basically reported everything that we needed to for the W-2s. So we can close that. Next, we're going to start to look at the 1099 INT and a combined Forms 1099. All right, so here we see there is a 1099 INT from Big Western Bank in Maria's name. And then there is a joint combined Form 1099 from Friar Truck Investments. And we have a 1099 INT in addition to a 1099 DIV. So we start to go through the information. And we see the first thing on Form 1040, line 2A asks for tax-exempt interest, and line 2B asks for taxable interest. All right, so on this first 1099 INT from Big Western Bank, the interest income is $801.88. And then the 1099 INT from Friar Truck Investments shows us interest income of $25.88 plus interest on U.S. savings bonds and treasury obligations of $500. So we add these three amounts. So keep in mind, box 1 shows interest income and box 3 shows interest on U.S. savings bonds and treasury obligations. This $500, this amount in box 3 is also considered taxable. So we added the three, box 1, box 3 from the combined Forms 1099 from Friar Truck Investments, as well as the $801.88 from Big Western Bank. That gives us a total of $1,327.76. The program tells us to round, so the taxable interest would be $1,328. And then 2A asks us for the tax-exempt interest. So if we look to the 1099 INT from Big Western Bank, there's no tax-exempt interest in box 8. And if we look to the 1099 INT from Friar Truck Investments in box 8, the tax-exempt interest is $400. Oh, wrong line. 1,328. And then for line 1Z, just pivoting backwards. Line 1Z, it asks you to add lines 1A through 1H. So if we look at this information, the only thing that impacts line 1 is our wages for the total amount of $78,980. So now we move on to 3A and 3B. So we look to our 1099 DIV from Friar Truck Investments. We have total ordinary dividends of $1,200, qualified dividends of $1,200, and then we have total capital gains distribution of $60. So one key thing that we are going to see is the difference between how ordinary dividends and qualified dividends are taxed. So based on this problem, all of the dividends received are qualified. So therefore, this entire $1,200 is going to be taxed at a preferential tax rate. So qualified dividends and total capital gains and distributions, those are treated more favorably for tax purposes. So depending on the taxpayer's income, the capital gains as well as the qualified dividends, they are either taxed at 0%, 15%, or 20%, again, depending on the taxpayer's income. So we completed lines 1, 2, and 3. And then 7 asks for the capital gain or loss, attach Schedule D if required. But in this case, we do not need to attach Schedule D, but the capital gain or loss, as we see on Form 1099 DIV, Box 2A, is $60. Now we see for line 8, it's asking for the additional income from Schedule 1, line 10. So we go to our Schedule 1, and we're going to close this out. We go to our Schedule 1, and the Schedule 1 represents additional income and adjustments to income. So we see there's taxable refunds, alimony received, business income, other gains or losses, rental, royalties, partnerships, S corporations, trusts, etc. So we know based on the fact pattern it let us know that she bought a South Dakota lottery ticket on impulse during 2023. Her ticket was lucky and she won $1,000. So typically, whenever you have gambling winnings, a 1099-G is issued. But in this case, we are using the fact pattern. And then as we see here, Schedule 1, line 8B, we report the gambling winnings. So total other income is $1,000. And we combine lines 1 through 7 and 9, and this is our additional income. And we report this on Form 1040, line 8. All right, so now it's asking us to determine our total income. Add lines 1Z, 2B, 3B, 4B, 5B, 6B, 7, and 8. So we get our handy dandy calculator. 78,000, sorry. 980 plus 1,328 plus 1,200 plus 60 gives us total, plus 1,000 of 82,568. And now the next step, it wants us to account for our adjustments to income from Schedule 1. So we open our Schedule 1 again. And as we open our Schedule 1, we know that we now need to factor in the adjustments to income. So as we know from the fact pattern, Terry was married before to ex-wife named Judy, and pursuant to their January 27th, 2016 divorce decree. So this is before the change to alimony treatment under the Tax Cuts and Jobs Act. It lets us know that Terry pays her $200 a month in alimony. So $200 times 12 months per year. So $2,400 will be reported. So the alimony paid would be $2,400. And then the recipient's social security number, it says her social security number is 566-748765. So we have that amount there. And we scroll to the bottom, and it asks us to add lines 11 through 23 and 25. So this is the only thing impacting the Schedule 1 adjustments to income. So therefore, we input the 24. And then it says here, enter here and on Form 1040, line 10. So we go back to our 1040. Line 10, we have the adjustment of 2,400. So based on this information, our adjusted gross income is $82,568 minus 2,400. Our adjusted gross income is $80,168. So we just calculated our adjusted gross income, our AGI, and now the next step is to determine, are they claiming the standard deduction or itemized deductions? So it just lets us know here, during 2023, Terry was in the hospital for a successful operation. His health insurance company reimbursed the $4,732. So it doesn't tell us anything about any medical expenses that were unreimbursed. State and local taxes, if we refer to the W-2, we see that they live in South Dakota, which is not subjected to state income taxes. So therefore, there's no state and local taxes. It doesn't mention anything about real estate taxes, mortgage interest, or charitable contributions. So therefore, as the fact pattern states, we can make any other realistic assumptions about missing data. So therefore, we would make the assumption that they, their standard deduction will exceed their itemized deduction, so it would benefit them more to claim the standard deduction. And as we see here, the standard deduction for single or married filing separate is $13,850. Married, filing jointly, or qualifying surviving spouse, $27,700. So therefore, they take the standard deduction of $27,700. Lines 14 asks us to add lines 12 and line 13. 27,700 plus 0 is 27,700. So the next step is for us to calculate our taxable income. So $80,168, which is our adjusted gross income, minus our standard deduction of $27,700, gives us taxable income of $52,468. All right, so now the next step is for us to determine our qualified dividends and capital gain tax worksheet. One key thing to keep in mind, the Schedule B, you'll essentially just input the information as you see it, or as it's reported rather. So we have our Big Western Bank, we have our Fire Truck interest, and then there was the Fire Truck U.S. government. So we essentially transfer over these amounts onto the form. So for Western Bank, we had interest rounded of $802. For the Fire Truck, we had interest of $26. And for the Fire Truck U.S. government bonds, which was on line 3, $500. So basically the amounts that we report here or report on lines 2A, 3A, or 3B and 2B and 3B is how we determine the amounts. And then we had the Fire Truck investments, ordinary dividends of $1,200. So that's how you would complete the Schedule B, essentially. And then the key thing is when you are utilizing the tax software, you input the 1099 INT and 1099 DIV information, and it transfers over. But again, just want you guys to see exactly how it's done. For the Schedule B, we have the Big Western Bank. It was 801.88, rounded gives us 802. Fire Truck interest, rounded gives us 26. Fire Truck U.S. government, which is the 1099 INT line 3 of 500. We add all three amounts, which gives us total $1,328 worth of interest. We carry the amount down to line 4 because there's nothing for us to subtract on line 3. So this is our taxable interest, and we transferred it to line 2B on Form 1040. Next represents our ordinary dividends. Fire Truck investments, we received a 1099 DIV, and box 1 for ordinary dividends was $1,200. And then we add all of the amounts on line 5. This was the only amount, and then we transferred that amount to line 3B on the Form 1040. So 1,328 and 1,200. All right. So now we're at this step where we need to calculate the tax. But before we can calculate the tax, we need to account for the qualified dividends and capital gains worksheet. So we start to look at this. I'll close the Form 1040 just for space purposes of us being able to see everything. So this qualified dividends and capital gains tax worksheet. So we start off with entering the amount from Form 1040, line 15. So if we go back to our Form 1040, line 15, the taxable income is $52,468. And it's asking us to enter the amount from 1040, line 3A. So if we scroll up, the amount from 3A is $1,200. 3 asks, are we filing Schedule D? The amount is no. So then it asks to enter the amount from Form 1040 or 1040 SR, line 7. So if we look to line 7, this is the $60 that was reported on box 3 of the 1099 DIV, which represents $60 of capital gain. Next, it asks us to add lines 2 and 3. So as we add these amounts, 1,200 plus 60 gives us 1,260. And then it asks us to subtract line 4 from line 1. So 52,468 minus 1,260, our subtotal is 51,208. So now for line 6, it's asking us enter 44,625 if single or married filing separate, 89,250 if married filing joint or qualifying widower, 59,750 if head of household. They are married filing joint, so therefore we input 89,250. Line 7 asks us to enter the smaller of line 1, which is 52,468, or line 6, which is 89,250. The smaller of the two is 52,468. And line 8 asks us to enter the smaller of line 5 or line 7. So 52,468 versus 51,208. So we report the 51,208. So for line 9, it asks us to subtract line 8 from line 7. So 52,468 minus 51,208. This is the amount that is going to be taxed at 0%. Line 10 asks us to enter the smaller of line 1 or line 4. So 52,468 versus 1,260. The smaller of the two is 1,260. It asks us to enter the amount from line 9, which is 1,260. And then the next step asks us to subtract line 11 from line 10. 1,260 minus 1,260 gives us 0. For line 13, it asks us to enter 492,300 if single, 276,900 if married filing separate, 553,850 if married filing joint or qualifying widower, and 523,050 if head of household. They are married filing joint. So we input 553,850. Next, it asks us to enter the smaller of line 1 or line 13. So line 1 is 52,468 compared to 553,850. So 52,468. Our taxable income is the lesser of the two. Next, it asks us to add lines 5 plus line 9. And again, when you're utilizing a tax software, it does all of this calculation for you. But this is to give you a better understanding of how these numbers are calculated. So that gives us a total of 52,468. Next, it asks us to subtract line 15 from line 14. It is 0, so we enter 0. And next, it wants us to enter the smaller of line 12 or line 16. Both are 0. In line 18, it asks us to multiply line 17 by 15%. So 0 multiplied by 15% is 0. It asks us to add lines 9 and 17. So line 9 is 1,260. Line 17 is 0. So line 19 is 1,260. For step 20, it asks us to subtract line 19 from line 10. So 1,260 minus 1,260 is 0. So this worksheet is basically determining how much should be taxed at 0%, how much should be taxed at 15%, and how much should be taxed at 20%. Again, that's one of the key things when we are dealing with long-term capital gains and long-term capital gains, and qualified dividends. They are taxed either at 0%, 15%, or 20%. So we move on to line 22. And it asks us to figure the tax on the amount on line 5. So if we scroll up, we go to line 5. we see the amount is $51,208. So we need to find a tax table. It says click here to access the tax table. So 51,208. Scroll to 51,000. Here we are. So it's 51,208. So based on this information, we know that they're married, filing joint. So 51,200, but less than 51,250. So therefore, the tax liability for the Redlands is going to be $5,707. So we close the tax table. 5,707. Lines 23 asks us to add lines 18, 21, and 22. So again, none of the capital gains or the qualified dividends are taxed. So therefore, the tax liability remains the same. So it is very important for this, worksheet to be completed because again, capital gains and qualified dividends are not taxed at the ordinary income tax rate, hence why we have to separate the amounts. So now for line 24, it asks to figure the tax on the amount on line 1. So on line 1, we see that the total amount reported here, which is the taxable income, will be $52,468. So here we have the chart. So if we're 52,000, $468, we would fall between this bracket, at least 52,450, but less than 52,500. So therefore, the tax liability would be $5,857. Based on the instructions, it asks us to enter the smaller of line 23, which is 5,707, or line 24. So we see that 5,707 is the lesser of the two, and it asks us to enter this amount on Form 1040, line 16. This represents the tax on all taxable income. So we go back to our Form 1040. Our tax is 5,707. From there, we factor in some credits. So we scroll down. We add lines 16 and 7. And then it asks us the child tax credit. And based on the fact pattern, it lets us know that Terry and Maria are eligible for the $2,000 child tax credit. Form 8812 for the child tax credit does not need to be completed. So we input the $2,000. Line 21 asks us to add lines 19 and 20. So 2,000 plus 0 is 2,000. And line 22 asks us to subtract line 21, 2,000 from line 18, 5,707. So therefore, our subtotal is 3,707. We do not have any other taxes, including self-employment tax from Schedule 2, line 21. So therefore, our total tax is 3,707. So now the next step, we get to the payments section of the tax return. And we know that from our W-2, the total federal income tax withheld was $7,768. So 25D wants us to add 25A through 27C. So our total federal income tax is withheld, $7,768. So now we have to determine our total payments in comparison to the tax liability. So it states, if line 33 is more than line 34, if line 33 is more than line 24, subtract line 24 from line 33. So tax liability of 3,707 $7,768 was withheld from our checks and paid to Uncle Sam. So $7,768, but we are only liable for $3,707. So therefore, we are due a refund of $4,061. The amount that we want refunded, we want the entire amount. Here is an option that I want you to be aware of, that individuals can choose to have their tax refund applied to next year. But in this case, they want their refund. So that brings us to the end of the Chapter 2 comprehensive problem. So some key things to keep in mind as we see here. Qualified dividends and capital gains are taxed at a more favorable rate. So they are either taxed at 0%, 15%, or 20%. So if you were working on a problem and you just use the taxable amount and you input the information into the software and it is telling you $5,857 as the tax liability on line 16 is incorrect, this is the reason why. The $1,200 which represents the qualified dividends, and the $60 from capital gains distributions, these are taxed at a favorable rate. Hence, we see 1,260. So that is something very important to keep in mind. Again, in the profession, you're not going to need to calculate or complete this form. Rather, the program is automatically going to calculate it on your behalf. But the key thing to keep in mind, again, qualified dividends and total capital gains distributions, those are treated more favorably for tax purposes. So this brings us again to the end of Chapter 2 comprehensive problem. There was a lot of information here in the instructions. Some of it we needed to account for, some of it we did not. But again, when you are in the profession, all of this information, you want to go through it. So as you are working through this problem, I would suggest you read it, because in the profession, again, it'll come in an email like this from a client, or it might be in the form of a checklist. But you want to make sure you double check all information so you can confirm the impact that it will have on completing the tax return.